Hello, this is Sumnima Pandey and I am covering introduction and comparison of four key financial institutions. Introduction. Capital budgeting is the mechanism by which plan proposals are evaluated and rated to decide which they merit an expenditure. This paper serves two purposes. First, it clarifies what the concept of financial market and capital budgeting means. And second, it shows how the concept of alignment can be applied. The purpose of this report is to clarify and understand the financial market and capital budgeting of different types of organization, and also how it illustrates capital budgeting research for corporate finance and how to extend the principle of coordination. For this purpose, I have chosen four companies from our financial institutions: Commonwealth Bank of Australia, Insurance Australia Group Limited, Westpac Bank, and Australian Real Estate Investment Trust. Now, talking about Commonwealth Bank of Australia. It is a commercial bank listed in Australian category of approved deposit taking. It allows contribution from persons and companies and then to allow those shared funds accessible to other citizens and businesses. Its main source of income is the differences between borrowers' interest rate and depositors' interest rate. Now, Insurance Australia Group. It is Australia and New Zealand's largest general insurance company. NRMA Insurance Group Limited changed its name to Insurance Australia Group Limited on January 15, 2002. It is not a customer-facing company, but it is the umbrella corporation that owns other well-known products for insurance. Now, Westpac Bank. It is an Australian corporation and financial service company headquartered in Sydney's Westpac City. Westpac was founded in 1817 and is the first and oldest bank of Australia. At last, Australian Real Estate Investment Trust. It is a unit portfolio of land assets classified on a stock exchange. It typically holds a portfolio of vast assets which cannot be acquired by the ordinary private investor because of the scale and valuation. And further topic will be covered by my friend Kavita.
Hello, I am Kavita Dhawodil. I am covering the part Analysis of Financial Management. We'll be talking about different financial institutes like Commonwealth Bank of Australia, Insurance Australia Group Limited, Westpac Bank, and Australian Real Estate Investment Trust. Firstly, Commonwealth Bank of Australia. It specializes in banking and financial service delivery. It functions across the segment like retail banking facility, corporate and private banking, investment finance and market, and many more. It provides home loan, consumer finance, and retail deposit products, as well as service to all customers of retail banking. It is an organizational center that provides support roles such as employee partnership, group communication and policy, group governance, and group treasury. Insurance Australia Group Limited. It announced its entire financial year in August and its half-year financial performance in February. It involves in general insurance and associated business activities. It works across the Australia, New Zealand, commercial and other parts. Now Westpac Bank. Australian Agency Combating Financial Fraud claimed that Westpac had neglected to disclose more than 19.5 million orders for payment. Regulatory Dog Watch also claimed Westpac has failed to conduct its due diligence on loan organization claimed that Westpac has violated the rule more than 23 million times. Finally, Australian Real Estate Investment Trust. It offers investor exposure to real estate properties. The main advantage of it is that they may have exposure to investment that might be largely out of control for private buyers. These were seen as low risk and secure assets that depend primarily on rental to provide steady profit. Some business later shifted their focus and went on to production, investing in offshore and financial engineering to fuel their growth in earning. And remaining part will be covered by my friend Achyut.
Everyone, it's me Achyut Raj Bhandari. Today I am going to present on topic Australian Financial Market Regulation. ASX, Australian Stock Exchange, operates the largest share market in Australia. It provides a transparent and regulated environment in business and for investor. Nearly 2,200 company and issue appears on ASX list. Advantage of listing in ASX: to collect money at the IPO level, to finance potential development during the listing. Next, offer more diversified and stable market capital and increase the business reputation. Some problems while being listed in ASX: takes significantly large amount of time. Also, IPO enlist risks, maintaining a listing and collecting extra fund. Heightened media attention may be an advantage of risk. The requirement for listing on ASX. Now, first, follow ASX listing policy. Second, corporation must satisfy minimum membership requirements for structure, price, free float, and share amount. Step of listing procedure on ASX: appointing advisor, preparatory work, commence institutional marketing, lodging prospectus, processing the listing application, marketing and offer period, and closing the offer. Listing fee: initial listing charge at the point of listing and pro rata requiring charge for the rest of the financial year. Next topic is Financial Advisory Service Registration in Australia. The register is a public record of financial advisors providing consumers with personal advice about complex financial product. The Financial Advisors Register lists all persons authorized to act as financial advisors. Types of financial advisors: a license of Australian Financial Service, an authorized representative, an employee or director of an AFS licensee. The financial advisor details: he or she should have name, work history, qualification and training, and the financial product they can advise on. Some exception in relevant products: basic banking product, general insurance product, consumer credit insurance, a combination of any of those products. Next, the professional standard of commercial registers. How reform affect you, timeline for the reform, qualification exam and professional development, code of ethics and compliance schemes. Thank you so much.
I am Deepak Thapa. I am going to present my portion of the case study and conclusion portion. First of all, I want to describe about the net current value. Net current value is the difference of the present value of the potential capital, cash flow at the specific discount rate, and present value of the future cash inflow. Similarly, net present value are difference in the different case. Like when 10% sale decreases, when price per unit decreases by 10%. Similarly, variable cost per unit increases by the 10%. At last, net present value when cash fixed per year increases by the 10%, which is already analyzed by the different data. Finally, I want to tell about the conclusion from the above analysis. The capital budgeting purpose, the measure the investment. Discount rate measure present valuation of the cash flow. From the above five financial institutes are the biggest capital exchange and the control platform. And 2,200 companies provide specific guidance and financial items, which is already described about data and calculation. This is the end of our presentation. Thank you.